It is Clarity Day, and today is going to be a big one because we're going to break it down, give you guys kind of an update of where the Senate Banking Committee is. And let's just get started. I want you to thank our sponsor, and that, of course, is Tangem. If you guys are into self-custody, this is probably one of the tools that you now use. If you're brand new to crypto, this is one of the tools that you should use, and it's very easy. This is like a little credit card. Now, it is not a credit card, because some people asked that the other day in the comments. But it's a card that works with your phone, and it's using an NFC technology that basically secures all of your transactions, all of your self-custody plans. This is the way to go. Of course, you guys can get true ownership, easy to use, as you can see right there. And the nice thing about it is it's very inexpensive, easy to own and get started on. So use our link down below. It'll get you into self-custody for the first time. And you will thank me later on that one, because self-custody is a cool feature of crypto. Before we bring in, actually, let's bring in our guest now. And that, of course, is Rebecca Walser, coming in from Walser Wealth Management. How are you, Rebecca?
I'm great. How are you? Great to be here. Thanks for having me.
All right, so Rebecca, we've got a lot of things to take a look at. The Senate Banking Committee is literally, as we're recording this, going through line by line a lot of the amendments that have been going on. But while that is happening, the S&P hits a 7,500. I mean, this is insane, Rebecca. 7,500? Come on. That's 10 trillion in 7 weeks. Have you seen anything like this before in your investing history?
I mean, you know, it's such a, there'd be two answers and they both be right. The first one is you could certainly harken back to the, late 90s speech of Greenspan saying irrational exuberance prior to .com, and that certainly comes to mind. However, Paul, this is, I believe, this is the largest leap in technology and abilities that we've ever seen in the history of recorded human time. Anything beyond this would be alien almost in nature. Like, this is so far beyond what we've ever seen before. So from that perspective, it is it's hard to say that the monetization is too abrupt and too high, because we just have no idea the impact of the change. This is going to impact literally every single piece of life we live and how we live it. So from that perspective, I don't think it can be overdone or hyperbolic. I really feel like it's justifiable eventually. But obviously, monetization is always rocky. It's always going to be expected to be volatile. And so anyone that thinks it's going to be, and I always say straight up and to the right, that's obviously a stock market chart I'm talking about, straight up and to the right. Anyone who thinks it's going to be up, up and away, no, it's going to be volatile. It's going to be painful. We have issues that we will know even if we get out of 2026, we might not get out of 2026 the way we think we are. And from that perspective, volatility will be a thing. Yes. Yeah.
Well, volatility, I think people are somewhat aware of that, at least that follow our show, and that because what we've seen in the risk asset market itself has played into this. Clarity Act Senate review is now underway. This is coming from the Senate Banking Committee. They have been going at it. Our research team has been diving into a lot of these. What's interesting and what appears to be happening, and we're starting to see a little bit of market move on this, is that most of these amendments that were submitted by a half a dozen senators seem to be sliding off. So it looks like they're going to pass this out of the Banking Committee, which would mean it's going to go to the floor. I know Gallegos even said, hey, listen, I may be okay with this going through the committee, but I'm still going to reserve my vote for the floor. That's the real question that's going into this. And of course, the odds right now, where are we setting at 71%, which has done a nice job of going up for sure. But when you look at the possibility of where Clarity is right now, it still has to go through a vote within the Senate. Then it goes back to the House. There will be some movement there. What kind of impact do you think this is going to have in terms of investors' sideline capital? And just think about whether people are in money markets, which we may get higher for longer with the Fed. We'll talk about that. People might just be holding capital on the side, waiting for this market to respond. What is your thinking on that?
So unfortunately, I have as a lawyer and someone who knows like how the sauce is made at the congressional level, I have a lot more reservations of actually getting an act passed this year. And I'll tell you the semantics of why, Paul. So first of all, you have to get out of the banking committee, which we know is what they're having a live vote right now on, or a live session on right now. And even if we can get it out of the banking committee, it's not going to, I don't see how it's going to get a cloture vote to, which is a 60 vote requirement, and we only have 53 Republicans. And so in order to vote on it at the entire Senate level, we have to get a cloture vote. And I don't see that will happen before the Memorial Day recess on May 26. If that doesn't happen before Memorial Day recess, then we're coming back and we're looking at potentially a June or a July. And then you also have to reconcile the House version with the Senate version. And the Senate version is where the banking lobby really went to work on this yield issue, which is clearly the largest issue. We have Klobuchar, we have Senator Warren talking about, Senator Warren and her first opening statement on the actual Senate Banking Committee said, listen, this is written by the crypto industry for cryptos. And so the negativity on the Democratic senator side is a really strange alignment to have Democratic senators aligning with the banking lobby. You've got Klobuchar, who basically is trying to say that Trump's family has benefited immensely already by cryptocurrency, and that she won't look at anything, and no Democrat senator should look at anything that doesn't actually restrict federal government employees or agency people from making money in crypto. So so let's just assume what you're saying. All of those things fall away. It gets out of committee. We still have a June or July potential likelihood of this actually before it even gets passed by the Senate, and then it has to get reconciled. And the House doesn't have anything about the yield issue. So we've got the banking lobby, unfortunately, just has so many bites at this apple. And the issue that we are coming down to, Paul, is yield, right? So they have settled on this. If it's a passive account with no activity, inactive activity, then no yield. But if it has any kind of meaningful transactions, which basically means, okay, you've either done a trade or you've made a purchase, then it can have yield. And you can see why this banking lobby is so concerned, Paul, because they see the writing on the wall. This is the end of banking as we know it. And it is going to happen. And so that's my concern, is that are we so short-sighted that we want to put a legacy banking framework around new technology, so much so that we restrict it so much so that it leaves the United States and it really gets birthed and born and somewhere else, and where else I couldn't tell you. But I just want to say we cannot allow the old legacy banking lobby to frame this, because it is going to happen with or without the United States. The United States can try to stand in its way, but it will happen globally. This is a global thing. We cannot control it. We cannot contain it. And unfortunately, I don't think the banking lobby is getting the memo. They're trying to frame things so they buy time, Paul. They buy time to still be, the major payment processing entity of our citizens. And yet that is just, the future is not with the banks, unfortunately.
Yeah. Well, and I think the real thing that you have to watch, I've got a clip here that talks about the crypto voters. And this is a survey that aligns very importantly because we have midterms coming up. So this is going to get a little dicey for a lot of these senators who are going to be voting on this, especially with the power that's coming out of the crypto voters. Let me go to that clip real quick and we'll take a look.
We surveyed 55,000 people to get to the 10,000 that held crypto. That's how we learned that about 1 in 5 U.S. adults was holding crypto. We just ran our second survey, and what we found was 1 in 4 U.S. adults now holds crypto. So about a third of crypto holders are women. More are over 55 than under 25. More work in construction than in finance. Crypto holders live all over the country. They span political party lines. 20% of crypto holders were actually using it day to day. This year, we've actually seen that double. We're now 40% of crypto holders telling us that they are sending crypto to friends and family. They're spending crypto at small businesses and large enterprises online and in stores. And about 30% of crypto holders accept crypto payments for their businesses. But at the same time, our data shows that about 2/3 of Americans actually don't think that policymakers understand crypto well enough to fully regulate it.
All right, so there you go. Unfortunately,
Isn't that the truth?
Yeah, that is the case. So we have the blind leading the blind right now when it comes to American policymakers. 67 million Americans hold crypto today. This was also supporting the data that right there. I think this is going to boil down to one thing, and that is the pressure of a lot of these senators that are going to be going into the midterms. And now realizing, if they even realize that there are this many Americans that this matters to. And what's most important here is this is working Americans. So this yield situation is a real issue when you start pulling that away from working Americans who can earn something on their dollar. This to me looks like we could end up with a bit of a train wreck. Do you think there's a possibility that we sway those other 7, 8 senators on the Democratic side to come over during this vote? What would you give it right now?
Gosh, I mean, I'm closer to a 30% probability of something getting passed in 2026, only because of the time frame here and because it's the midterms. And unfortunately, if you look at Senator Warren's career, she has a history of Consumer Protection Bureau, all of these things of like trying to be, I'm the government that's going to protect you from the risks. And the risk is that we try to contain something that is global and we get left behind. That's the risk. And I didn't answer your question earlier, which was, do I worry about retail to kind of sit on the sidelines until this is clarified? I worry about institutional money. We're seeing BlackRock, we're seeing Goldman, we're seeing all of these monetizations of money market funds through tokenization. And that is specifically designed, Paul, to help the stablecoin issuers that have to hold treasuries one-to-one from the Genius Act. That's designed for them to be able to go out and issue stablecoins and yet not have to manage their money market treasury backup reserves. And that's why all of these things are being institutionalized and tokenized. And it's for the stable. There's a lot of institutional pieces that are the framework, the plumbing is being put into place right now without clarity around how it's going to be regulated. And that is the risk. And so I just feel like, I know Polymarket, I know everyone thinks, oh yeah, it's going to go through and and that's great. But probably what will likely happen is we will get an iteration that will pass. I don't know if it will pass in 2026. And that's the scary thing, because if it doesn't pass now and we get a divided Senate or a divided House and Congress, or we get a blue Congress that's not going to get us what we want. And we probably won't have a chance then to get that until 2030. We can't afford this delay, Paul. We cannot afford for the United States to be 4 years on the wrong side of the regulation of this thing, or it is going to bypass us and it is going to, basically coagulate somewhere else as the hub of the global crypto birthing. And we aren't going to be it. And that's the problem. I just can't understand how these people cannot get beyond the United States and realize this is happening at a global level and we cannot get in the way of innovation. It is happening. It is not stoppable. And this banking situation it could be really tragic for us if we don't get this worked out.
Well, listen, I think you're not very passionate about this, okay? So we're going to have to step up the energy there, Rebecca. I think you're definitely on the right train of thought here. And to your point, the amount of institutional capital that is moving into the market, but more importantly is the amount of institutions that are strategically building on this now. You've now got the CME Group. They're launching a NASDAQ CME Crypto Index Futures. This is on June 8th. This is launching. So to your point exactly is that this is now going into a much more broader market. We're seeing this come across in pretty much everybody. We saw this with JP Morgan announcing their news, moving into tokenized money markets. We're going to see more companies on there. Schwab now coming into active trading with digital assets. I mean, you couldn't be further along. And this stuff is going to move like light speed. I'm just kind of curious to what point we're going to get it. Listen, we have breaking news. Breaking news. They have moved they've moved it out of the Senate banking. So it is moving forward to the Senate floor as appears to be as is, coming off of what we saw in the markup text. We'll cover more on this later. So to your point, we were kind of anticipating this today, is that this is huge. Next step is really how do we sway those senators? I think if they talk to you for a few minutes, they probably would come over and say, yeah, maybe we need to
play them your podcast.
Rebecca is doing. So let's talk a little bit about IPOs, because there are some things that are happening. One thing that's caught me a little bit by surprise is the fact that we have, alongside giants like OpenAI, SpaceX, Stripe, these are some of the biggest unicorns out there. We have one of the crypto natives in there, and that is Ripple Labs, the home of XRP. But the point I'm getting at is you have now a top 10 company ranked by valuation that is a crypto native company in Ripple. You now have all of these new fintechs that are moving quickly to raise next generation capital and possibly next series, and then eventually go IPO. Do you think we'll see a mad rush to IPOs again if clarity goes through?
I do think that I don't imagine that. I can't imagine right now, like with the exception of I really can't imagine right now if clarity is delayed, which is the biggest risk, right? The biggest risk is that it doesn't pass in 2026. We get some kind of divided midterm election, and then we don't have a real opportunity to get it passed in a format that is going to be market friendly until 2030. So that would be the worst case scenario, the doomsday scenario, I think, for the United States. But as far as IPOs, I think that obviously Anthropic, SpaceX, OpenAI, all real, SpaceX obviously being a little bit different, but all very AI specific, very AI heavy, and then crypto heavy, obviously Ripple. And for me, my general IPO advice is always wait 6 months, because it's very rare that you get something that takes off that at a price point that 6 months later it is above. It has to be a true unicorn. It has to be a true outlier. Otherwise, we get higher. We just over exuberance, and then rationality takes over. And within 6 months, you kind of work out 6 months to a year. Even sometimes you work out what the real valuation is, and the first purchasers at the exchange level are usually not the winners. So I like to wait 6 months to a year on IPOs. But let's see. This is going to be obviously the largest IPO year. Just OpenAI and SpaceX alone. You add in there Ripple, Anthropic, and you're just looking at some of the largest IPOs. And certainly IPO activity that we haven't seen in 2 decades, probably. It's been that long, so it's amazing.
Well, and these are monsters. These would be absolute, stars in terms of IPO season. But to your point, I think there's going to be a lot of companies, and either smaller IPOs and or companies that are in the universe of many of these organizations that probably will end up doing well along with these launches, because it will raise a lot of narrative, I think, around particular sectors, especially in the space sector. I'm following a lot of the emerging space stocks right now, which seems to be, and if SpaceX actually goes live and we do see the kind of PE that we're anticipating, I mean, these are going to be huge. Let's move over to kind of next phase here, because now we're talking about the Fed, who's getting ready to take control. We're talking about Kevin Warsh. He's moving in. We're gonna see him in the next FOMC meeting. He'll be right there doing Chair Powell's former job. I want to play a clip, because this is Mohamed El-Erian, who's talking about the next phase of how this economy will affect the Fed's decision. I want to hear what you have to say. Take a look.
So for now, meaning the next few months, they'll act by not acting. The Fed is going to look at this, and it's going to stop it from cutting rates for most of the year. And if we get a rate action, it is more likely to be a hike than a cut. But I think the scenario is they will do nothing for at least 18 months.
So you think they can sit on their hands for that long?
I think they're going to sit on their hands because the next stage that we're going to see is what I call demand destruction. So if you remember, there were 4 phases to the shock, the economic shock from the Middle East war. Number 1 is energy prices and interest rates go up. Number 2 that we're seeing today is it starts to be an inflation problem, much broader. Number three is the affordability issue becomes severe enough that people stop spending. That's demand destruction. And number four, hopefully we won't get there, you get financial instability.
All right, so there you have it. They are believing, some analysts believing that this is going to go higher for longer. What is your opinion right now? Odds of rate hike right now higher than 30% of the odds that a rate cuts, less than 2. So what do you think? What do we look like?
Yeah. Oh my goodness. So this is so, it's so hard because we have a new Fed chair that literally got confirmed on the 13th. And to me, his record showed that he was a hawk. Which I am more on the hawkish side of a central bank policy, monetary policy. So I was really happy for that. But obviously Trump nominated him expecting him to be dovish and cut rates and to stimulate. So the Federal Reserve has been doing quantitative easing. They don't call it quantitative easing, but they basically, with the RMP, basically they we're buying 40 billion of treasuries a month. Mm-hmm. Right. And in April, they decided to trim that from 40 to 25. But we have, if you look at the M2 money supply, Paul, from July of last year to February, we increased that by $1 trillion. We have a ton of liquidity in the system. And so that would be very accommodative. That would be, indicative of helping Trump. This was Powell that did this. Warsh coming in, we've already seen that it was trimmed from 40 to 25. That's already going to impact liquidity. The problem is you have obviously CPI coming in 3.8%. You have PPI coming in at a massively higher number. And that's, of course, the wholesale prices for April, 6% year over year. There's just no chance with the CPI and a PPI of these ranges, of course, greatly impacted by the Middle East and what's going on with Iran. But when you have a CPI and a PPI in these range, the Federal Reserve is not going to be able to justify cuts, period. Yeah, and that really puts the Treasury back on its heels, because that just continues to mean that they can only finance what they need to finance on the long end of the yield curve, which is too high. And we can't afford to be on the they can't afford to sell at the long end of the yield curve. It's too high. They have to do short-term financing. And it's a problem. So this is a disaster from a perspective of a brand new person coming in and trying to establish what their framework is and what their policy is, because you're really fighting against a hot pricing, situation scheme, and this is not what you want to come in at trying to be dovish. It's just not what you just can't do it. And you've got really a hawkish person in his history with the Fed on the Board of Governors coming in and trying to be dovish. It's just not going to work. There's no Federal Reserve president, I don't think, that could possibly ever justify cuts in this kind of environment. So again, not only from the Federal Reserve perspective, but from the perspective of the midterm election, this war has to end, I think, the latest by July, and we have to have some kind of price stability because otherwise it's going to impact people so much that they won't forget it in November. They will still vote with their pocket, even if prices have come down, if they haven't come down long enough. So this is a massive problem. When you get to 4.5%, we just had, Paul, last week, the lowest consumer sentiment survey for the University of Michigan ever. Right. And it's like literally people could have it's really a bifurcation between the equity markets and what people are feeling in their pocketbook. And when you got $4.50 average gasoline prices across the country, people are going to vote you out. I don't care who you are. They just vote now with their pocketbooks, and they just do not want to stand for higher level prices, especially when you have half of the financial media or all of the financial media, a lot of the media couching this war as it was unnecessary, Iran doesn't have nuclear weapons, and blah, 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 blah. So you just have this constant banging of this wasn't even necessary, and look what we're paying at the gas price, at the gas pump. It's a problem. So the Federal Reserve is going to have a massive deal on how do we deal with these higher inflation rates and not be able to cut, yet we really can't afford to finance anything beyond 2 years because the yield curve is just too high on the back end.
So just to get clear, because I want to make sure I understand where your position is, would you be in the rate hike camp right now for 26, like what the odds are coming in, or would you be in a higher, just basically a pause, continuation of pausing multiple times?
I think it's gonna. I think that Warsh would have a really difficult time, even if he was hawkish. I think he'd have a really, really difficult time coming in how he's come in with who nominated him and hike rates. He would have to have such clear data. And you know, one of the things that Trump has said, and one of the things that he wants the BLS to do is collect data in a different way, more quickly. It's dated. It's out. You know, it's not. The surveys aren't being completed. Sure. And so I feel like we're going to get a push to get better data. And as long as that, you know, I think they're going to have to wait a while before they would expect a hike, because clearly this administration wants cuts. And so a hike is not anything that was on anyone's radar. But again, this war changes everything.
Yeah, yeah. Well, it does change everything, and I think we're going to be dealing with that for some time. The other factor that's going to play into this is how the economy is doing. To your point, you know, around a lot of other areas, you know, it's beyond what we're going to see on productivity with AI, what kind of jobs numbers are going to continue to come through for the summer months. And then, you know, the other issue is you've got Jerome Powell still sitting as a governor there within the Fed, which is ironic, who could easily be another swing vote, you know, in terms of how this plays out, even down the road, if you were even to get one. If you gave it a 1 in 10 chance, 10 being best, of a rate cut in 26, would you give it what? A rate cut somewhere in 26, could be way down in maybe the December or the November meeting.
I would say, based on where we are right now, we have less than a 30% probability of a rate cut in 26.
Going to lightning round here. Here we go. Like Jurassic Park, life will find a way to pay stablecoin yields. What do you think?
Agree. 1,000% agree.
Yeah. Some way or another, we're going to get stablecoin yields of some sort coming through this bill. It's actually centralized exchanges who should be worried about deposit flight to DeFi versus banks worrying about deposit flight to centralized exchanges. What do you think?
No, I don't think so. I think it's the banks that are going to be the loser on this.
Banks. I'm in the middle here because I do see DeFi becoming a very active area, especially if we get clarity, alignment with where DeFi tools can be, because we're starting to see so many institutions use it. And this could be interesting just because of that in itself. So I'm going to go on the fence there. Trump has shown a suspiciously surprising amount of restraint, not calling out bankers, Citadel, anti-crypto Dems. Why? You think he's just busy with everything else or something else?
Maybe he's, you know, maturing in the job and realizing that it's probably not best to insult the people that you might need to help vote for you or vote your way. So I put me in the middle because I feel like, you know, there have been some comments, but, you know, now that I know middle is an option, I'm going to go there.
There you go. You're going to, no more middles for you, okay? You're going to go down the, If clarity doesn't pass or becomes bank slop, Trump will lose retail crypto voters.
Absolutely, yes.
Yeah.
True.
Okay. Very much so.
And
when we say Trump, what we're talking about is really Republicans and the MAGA movement. Banning stablecoin yields and rate hikes equals a recipe for economic disaster, but massive bank profits here.
Agree. Absolutely agree. I mean, you know, the banks can only delay things for us, but they also can actually really hurt us by making the hub be outside of the United States, just circumventing us completely.
That is a big one. Trump wouldn't dare invading another country before midterms. Do you think he'd do it?
I'm going to agree on this one because I feel like he's got his plate full with Iran. I feel like, yes, I think this is true.
Okay. Yeah, I think he's figured out that, no, that was not as good a move. That wasn't a move.
I wish we had done it last year. But whatever.
Yeah. Each new war chaos event ironically spreads panic and Bitcoin adoption, do you think?
Interesting, because we had a pullback, you know, when the war first broke out. But then last month, April, we had massive, you know, 2 billion plus ETF inflows, net inflows. So I'm going to say true. Yeah. I'm
in the true camp just because I think there are people around the world, you know, even if you look at people in Dubai, you know, I talked to several who started to liquidate other assets moving into Bitcoin so they could move quickly, you know, and that included physical gold, people getting out of physical gold. There was a big rush on physical gold because they were worried about transport. So that's an issue.
Amazing.
Trump fights Kevin Warsh if the first thing Warsh does is a rate hike. Do you think he'll get upset and start calling him out like he does Powell? or do you think he'll pass?
I think he'll try to be a little more tactful and give him a little bit more of a rope to hang himself and some more leeway than immediately. But I do think if a war starts going down the hawkish, war path, which I know he wants to reduce the balance sheet, which is very hawkish, and it sucks liquidity out of the system. So, yeah.
Yeah, I think Trump will go after him because I do believe that Trump has put so much on that of rate cuts, and he knows, just like you and I have talked about, is this refi is important, and the U.S. is getting killed on it. Kevin Warsh has the spine to stand up to Trump's lawfare pressure. Do you think so?
I think so. I think true. And I do think that I hope they're going to work collaboratively. So far, I believe that they will.
Everybody I've talked to has said that this guy is actually a good pick for Fed. He could end up really being a special one. We'll see. Remember, he was in the 2008 debacle that came out of a very interesting time. He was, I don't know if I would say he was on the right side, but $1 trillion Anthropic rug-pulling secondary market share highlights that private and public markets are broken. Do you know what happened here? I didn't want to pull this.
I mean, yes, but if you want to just give me like your synopsis,
so
just again.
Anthropic secondary markets. The people were investing in it, private. They were going off into the secondary markets with those particular securities. And Anthropic basically said, no, you can't do that. That's void. So it's basically their offering that they voided to some of those companies who had purchased them. But it rug pulled the secondary market. So there's no more secondary market for Anthropic out there. So does that mean this market is possibly broken for these secondary markets like this?
Yeah. I mean, I feel like that it is broken. I mean, there's a lot of people that through secondary markets, meaning that for the audience's benefit, that the investor's not on the CapEx table. They're not listed on the CapEx table as an initial investor, and they're not known publicly as an investor because it's being sold. I have initial shares before pre-IPO, and now I'm selling it in the back market. And so I do feel like this is probably overall a good thing, although in general, and I that's just because of my IPO experience. However, I would say if you can buy in before the IPO and then literally usually sell out on the IPO day or the day after when it really takes off, if it really jumps from the initial offering price, then you can get your money back and make a profit right away. But then you want to wait the 6 months to a year to buy back in when the real monetization value comes. But yeah, this is clearly an issue, and I feel like what's happening, Paul, the reason that these things are important and is that it's taking so much longer, and there's multiple seed rounds of funding prior to IPO, whereas usually IPO is looked at as this is your funding round. That now we've got these really advanced companies coming on to IPO much later in their life cycle than what we've been, especially with that technology that we've been seeing, and that's the issue. So I do feel like there's been a lot more of a delay of giving people access to these companies than what we've been used to in the past. For
sure. Polymarket is the greatest checks and balances on an out-of-control private market.
I love Polymarket. I love all of these, these publicly traded. And when you have to bet money, then it's scientifically proven that is a more accurate when you've got to back it with your own money. So these things are absolutely libertarian tools to show the world what the true feeling of people is. Like, I wouldn't trust. We should go to all of this for polling, and we should no longer trust, these public polls that are so off that haven't been right in several election cycles.
Kind of did that in the last election, so
absolutely.
I think we'll see and we'll find out if it's true checks and balances are in play coming on the midterms, because if it starts showcasing, and I think right now, for instance, you guys can go check Polymarket. I didn't pull it up, but currently in terms of Senate possibly going Republican, it flipped back. So it's been back and forth. So very interesting to see how it's performing in terms of the political side. Trump pardons everyone involved with World Liberty Fi. If there's an ethics rule that gets included, what do you think?
I mean, this is Klobuchar's wish, right? This is what she's saying. I won't vote for this without an ethics rule. Oh, gosh. That would be really difficult for him to do, clearly. I have to say no on this, but I just don't think that it's going to get in the act. It would just be so blatant, right, for him to do that, and also kind of like
this would be before he leaves office. This would be before he leaves
office. Before he leaves office.
Yeah.
I still have to say no. I just
Really?
think it's so blatant.
I think he would do it.
Oh, wow. Okay.
Yeah, I think he would pardon all of the. I mean, it's mostly his kids. I mean, just like Biden pardoned Hunter or someone pardoned Hunter. But that's the point. Trump abandons the Iranian war before his White House UFC fight.
No, not. I don't think so.
Not on June 14th. So
No, not, and that's his birthday too. I'm pretty sure.
yeah.
I love
Listen,
it.
Rebecca, it's always fun doing these lightning rounds with you. Thank you so much for coming in today. You're always a handful to deal with, and thank you for that. We appreciate it.
That's good. I hope. I think
Yes,
that's
always
very,
good.
very benign. I'm not exactly sure what it means, but okay.
That means good because
Okay.
normally I get people who are, and I'm not discounting all of our guests, but sometimes they just won't answer. I ask them the question straight on. You always give us answers, which is what I like. That's my point. But thank you for
so
coming in.
much. Thanks for having me. I appreciate it.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.